I was saying that most of the
This
time,
call is now being recorded.
most of the time you hear traders say, when I trade, trading demo accounts is different from trading live accounts. And I tell you, they say there's a difference. I tell you, there's no difference. Open a live account here, open a demo account here. Put a buy here, put a buy. If you can click them at the same time, they will move in the same way, give you the same result. So there's absolutely no difference between your live account and your demo account. The only difference that you will see, I said no difference, and I said the only difference again, because there's no difference. The only factor that is the challenge is you, your emotion. In the demo account, your emotion is not involved. In the live account, your emotion is involved. You place a trade on the demo account and it's going south, it's going down. You see a drawdown, maybe you open a $1,000 demo and the trade is going down. It went down by almost $100. You say, it will come back, it will come back. I did my analysis where it will come back, it will come back. And eventually it does come back. But when you are trading, a live account, the same trade is now going down against you. The next thing you are calling, sir, I don't understand what is happening. Should I cut it? Should I cut it? What is happening? You say, it is now, the drawdown is now $97. Should I cut it? Are you not the one that traded the demo account that was comfortable? Now, this other one, it's your live account, is real money. And that is why your emotions come into play. So for us to adequately take out, because in this practical class, we're going to be doing practical, we're going to be taking live trades. I'm going to be showing you some tools that we are using. I'm going to be showing you how to read the market, that even when you use indicators, if you use indicators or you use an image, please, I want you to listen to this. I want you to listen to this. Please listen very well. Many of us, we trade with EAs. When you trade with an EA, the EA is going south. When based on your market's knowledge, many people don't know what to do, because you put an EA for whatsoever reason. Don't think EAs are always correct. Now the EA took a buy, and you look at the region where this EA is taking a buy, is the support, is a resistance zone. That's where it's taking a buy, and you leave it. It is EA that took it, and you left it, and the thing is going against you, coming down, because it has hit the resistance. You are not able to look at it and say, this trade that this EA has taken is not going to work. So for you to intervene, you can't intervene because you don't know what to do. You are suspecting, will it go, will it not go, and things. That has made a lot of us see EA are fools. So ladies and gentlemen, that's why I want us to really take our time, pay attention. If you can, try to be in all the classes for this training, so that you can get the best of it. How do you read your charts? What do you know? What is the structure? I'm going to be using indicators, and I'm going to use the SNC so I'm going to be finding some terms for you, and that's where we are going to start from today, where you understand some terms that we'll be using. So ladies and gentlemen, I want us to please pay attention. That tool is not the ultimate. There's no ultimate tool anywhere. I have tools, we use tools, but you see, your knowledge of this market is very, 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 so that when the tool is going, market is going in a direction. I have seen that was a time I traded one of these, we call it the AXI account, and I got to a level where I was already qualified for my funding and things. And so I got qualified for funding, and then the EA picked a trade. And from my understanding, I look at this trade, there's no change in structure in this, no break of structure in this market. Why is it taking this particular trade? So in my mind, I said, let me leave it. It's going to do its thing. It's going to do its thing. Let me just leave it, because I always teach people, when the EA is trading, don't interfere. When the EA is trading, I'm sorry, it's not a good advice. For me now, I've come to understand that if you understand the market, I left that thing, that particular trade affected my account. And I just asked myself, Shola, who is more intelligent? Is it you or the EA? Who knows this market more? Is it you or the EA? The EA followed some instruction buy when starting. Oh, when the stochastic cross, when the blue stochastic is on top of the red stochastic, okay, buy. Or when it is following instruction, but it's me that understands market structure. And when I understand market structure, I should be able to intervene when the market is not, when the EA is taking trades that are not. So please, I want you to get your paper, get a book. I want you to get a book. In the next couple of days, we will be doing some weeks, we'll be doing some serious learning, and let us take it as such. This is not a marathon class for you to win. If you use 6 months to learn this skill very well and understand, and you are not dependent on EA or indicators, and you can use them very well, this is a skill that will help you for the rest of your life. I understand what I'm talking about. I understand it very, very, very well. So get a piece of, it's not a piece of paper, get a book that you are going to be using to take notes, so that we can be on the same page, as it were. So with that being said, let me share my screen. Thank you very much. All right, guys, everything in the markets, everything, what you are seeing on the chart here is everything that you need to see about market movements. Every time you see markets going up, painting up and down, money is moving in these candles. Money is moving in these candles. And as money is moving, yours is no. If let me look at this. If you ever knew that this Euro USD price is going to move, that price is going to move from this place to this place, why won't you buy this market? If you need, now we can look at the charts and say, oh, if I was here, I will have taken the buy. Or you will have said, if I was here, I will have taken the sell. How many pips? About 167 pips. Man, this is big money. It is true that it looks like it. But what is it that you will see? What are those things that you need to know fundamentally, that as you trade, you are able to follow this? Now, please, before we go on, I want to encourage you, for those of us, because there are some indicators some EAs that will be given out for free, at least for a good number of months. Do you understand? For free. But it is going to be issued for those that have what you call a live account. You should have a live account, and it will be a sent account. I'm going to explain that at the end of this class. I've prepared it that we are not going to be using demo for anything on this class. We are going to be using a sent account, so that anything we know, we are not just put our money where our mouth is, or what they call it. Do you understand? I'm going to tell you what to do after this class. So let's take a look at this chart. There are some terms that we need to familiarize ourselves with. If that is the only thing we're going to do today, fine. And then so that you can't finish learning Forex in a day. It's not possible. So what are those terms that we need to understand? So what I'm going to do is I will bring up some terms that I have kind of put out here, and then I will talk about it. Then we go into the chart to look at it, so that you have a better understanding of it. Ladies and gentlemen, I told you this is like the scratch, and as I told you, we'll be using the SMC model. We talk of more on the SMC model. For those of you that have been looking for how to trade SMC, I'm going to be using that model a lot. We have different trading models and things, because it goes with the kind of indicators and EAs that we are going to be using. All right, so let's go quickly. Number one, we are going to be some of the terms that you need to get acquainted with is the term we call higher high. Oh, you hear somebody says, when the market makes an higher high, don't take a trade, don't take a sell trade at that point. What does higher high means? It means a new high above the previous high in an uptrend. And then I'm going to take HH, HL, LH, LL. These are simple things, so I will just rush these ones. So HH, higher high, a new high above. Now let's go quickly to the chart and look at, when you talk of high in the market, this is a high, this is another high, this is another high. Okay, for us to easily identify it. Let me put up something here. Indicators. I think where is this? I have one I call, just a minute. Okay, look at this. Okay, sorry, let me change this color. Let me change this color to white so that we can this. Understanding this, because it's not, I'm not teaching higher, low. Those ones are children's topic in as far as this thing is concerned. But when you begin to talk of change of character or structure, you must understand what high is and lower low is for you to be able to have very good grasp of that aspect. So just let me tick in this so that we have good concept. Now look at this. You see this? This is a high. This is a low. This is another high. It came low. People that expect that once they put money in Forex, it should just be going up. They never try to understand that there is a time you might enter a trade. You put an EA. Ladies and gentlemen, please, I want to have this understanding. You know, somebody gave you an EA. That EA, the person said the EA is doing fantastically well. And then you too, you now got the EA. The time that the person gave you the EA, maybe the EA has been buying and there has been good profit. But the moment you put the EA, that may be when the market is doing what we call a pullback or something. And then you are now losing money. Because of that, you say, oh, this EA is not working. Do you understand what is happening in the market as at that time? Many of us have condemned many indicators of EAs because of lack of understanding of this. You see me talking about indicators, EAs, because, ladies and gentlemen, that's where the world is going to now. It's not just about you trading with your brain anymore. It's you using tools for you to trade. Guys, now let's look at this, but you must still understand some fundamentals. Now, look at this. Between this high and this high, you see that this high is higher than this high. This is another high. This high is higher than this high. This is another high, is fairly higher than this high. So look at this one. This is low. This is a low, but it is higher than this low. This is a low, but it is higher than this low. This is a low, like a valley, but it is higher than this low, and so on. So when you see higher highs in the market, you can rightly say that the market is trending upward, that it is an upward trending market. So that is just the meaning of higher high. So don't let me think. Then you will see higher low. What does it mean to have higher low? That's what I just showed you, that where there's a pullback, you see the market was going up, it pulled back and continued in its upward trend. Whenever the lower low, when this low is not broken, that means we are still in an upward trend. So this is going to help you to identify when should you enter the market, when should you hold on, when is a trend continuing, is there a break of structure, is there a change in character? These are some of the things that you need to know, even when you are using, to be able to intervene properly, even when you are using your indicators. So you have higher highs and higher. So this one is a higher low to this one. This one is a higher low to this one. So when you have higher highs and higher lows, higher highs and higher lows, here we go. These are higher highs. All these ones, higher highs. Now this is an upward trend, and obviously you can see it's going up. And when you have higher lows, it's an upward trend. Now the second one that you need to know quickly, when the other side of it is when we have lower highs and lower lows. When you have lower highs and lower lows, what is the market doing? Obviously the market is trending downwards. Let me quickly see a pair that we can use to quickly justify this. I think we can still use this pair, maybe go backwards. Okay, now I think this is a very good one. Look at this pair here. It says lower high. Sorry. This, get off this. Okay. All right. So let's look at this. You see lower high, this high compared to this high. Look at this for this side. This one is higher than this. This one is higher than this. So you are talking of an upward trend. But there was a change in this trend, and the market started coming down. In this situation, you have higher, lower highs. The next high that came did not break the previous high. It came down again and broke the previous low. When it broke the previous low and formed another low, it went up, but it did not break the high that is here. Because it did not break that high, it formed a lower high. Anyone in this market begin to look at and say, it seems there has been a change of structure and the market is going downward. So you see lower lows, and lower highs, lower highs, lower highs. You are going to come in contact with this when I begin to talk about the breakout structures and every other thing. So that is that. I hope you get in this. Now, we now talk of break of structure, BOS. When price breaks a previous swing high or low, signaling potential shift in control. Guys, you see this aspect, this one, you need to have an understanding of this aspect very, very, very well. This aspect, you need to get a grasp of this. If you understand this part, it's going to help your trading a lot, no matter what you are using. So let's go to the chart and look at something. Let's go to the chart and look at this. Remember, look at when market went high here, it came down. It went up again, forming another high. And then it came down, forming a low. Now, look at, at this point, I want to know whether I should enter the market or not. Look at this low. This area here. You see this place that I've highlighted as blue. I expect that as the market broke this, it should start going up. Of course, I'm not going to teach on wave theory here now, but let's just go on as, okay, it did not break. Because for me, what I will do, I'm not going to overwhelm you with indicators or anything. Oh, maybe I will come to this place. There's a tool we call the Fibonacci. I'm going to explain it to us later on. Do you understand? If I put my Fibonacci, I say, oh, this Fibo is telling me that this market is coming down and it's just retracing, it will go up again. All right. So once it gets here, because I've seen something, I'm going to teach you everything here. Now, I've seen something go to my 61%. My expectation, which is the same thing for every trader, you will say, oh, this market has pulled back. It is the right time for me to buy, especially if it has hit a supply or a demand zone. Because it came down here. I'm going to be in the course of the time, I'll be telling you something, break of what you call the fair value gap and things. Don't worry, don't let us go by a lot of things. Now, there's a demand zone in this area. And when price got into this zone, would have taken a buy in this zone. I'm not showing you how to take a buy now. I'm just, God, I don't want to mix. I know a lot of us are new. I want us to go slowly. I'm trying, and I don't want to, a lot of things are jumping on my head there, but I will slow myself down. This market has been going up. Let me put up this line again, guys. Please, just follow me. You will get it. It's a simple stuff. Do you get? Let's put this line here. Let's put this line here. Or let me delete this. I take my trend line. I will draw a line from here up like this. Okay? Can you see something, guys? It's as if, do you notice that market comes down here, go as if they drew one invisible line. It came down again here, touch this line. You know, we just drew this line now. These are resist support lines. Do you understand? Diagonal support lines. Now, it came down here, went up, came down, touched the same line again, went up. You know, naturally, ordinarily, you will expect that when it comes down here again, the next thing to do is to go up. You are not wrong. So maybe I will have taken a buy at this zone. If I took a buy If I took a buy at this zone, if I have maybe my profit risk reward, maybe I will have hit my profit level and out of the market. All right. But then let's look at what happened. Instead of the market going further, it now came down. It came down. And when it came down, you know, your thinking is maybe it wants to test this trend line again and then go up. But this time around, you now see it comes down and broke the line. See, I've seen a lot of traders, they say, oh, all these trend lines don't work. All these trend lines. And why are you fighting what is not? You say trend lines don't work? How can you be so naive? Because you learn a particular strategy, you say every other thing is not working. This is the best. Don't let anybody deceive you. This is the best strategy. Money maker strategy is the best math strategy. SMC is the best. Do away with any indicator. Indicators are, you see, indicators are not good. Indicators are not good. Some people are making money with indicators. If it's indicators that will help you to learn it first before you go into price actions and things. So here, look at what happened. Anybody that is trading that sees this kind of thing, maybe I have drawn my trend line when I came to this market, and the moment I see something like this happening, I don't want to wait. Look at, guys, please, oh my God, I want you to get this. You see, at times, this is where most of us, your EA will begin to draw you down to massive loss, and you just hang on there as like an orphan who doesn't know anything to do. Look at this market came down here, broke this line. This is a trend line that the market has been touching, but this time around it touched this line. I want to assume that when we started, this one was not there. So when you open a chart, please, one of the things you will try to do first is that identify the trend. Always track whether it's an EA that is trading for you or you are trading for yourself. Please, one thing that you should try to do is, especially on the higher time frame, the 4-hour time frame, please identify the trend. Can you just try to write this down, please? Write it down. Identify the trend of the market. You come into a market, the first thing you want to do is identify the trend. You want to plug in your EA into a pair. You want to first of all identify the trend. So people say I should install the EA. You just install the EA. Hey, market they go up that time now, or it's coming down now, you don't know. So because you've identified the trend, if the EA begins to buy, oh, you said, well, that is what you should be doing. And when you've identified an upward trend, and then you see your EA selling, your medulla oblongata should warn you and tell you, God, there's something wrong. You need to go back to the chart. You see this idea that people always have and say, just set it and forget it. Just set it and forget it. Hey, I've done it before, and I have taught it also. I tell you, it doesn't work. Especially for those of us that love to trade this metal, gold. For those of you that love to trade gold, set it and forget it. Set it and forget it. EA can fail. EA can fail. Market can change structure at any time. Now, look at this. Assuming, look at, if I am in this trade, let's say the time I put up my EA, I put up a line here, this trend line, and I saw market buying. I will know that is fine. And then I now open my laptop. I came back from the office and I saw this line broken. If I say that this line is broken, you know what some of us will do? Oh, quickly, you will just say, oh, it is selling. You cut it off. Or there's what we call breakout and retest. Breakout and retest. This is change in market structure. Now, let me take the one. Oh God, I'm always jumping ahead of myself. I was talking about breakout structure. So this trend line is a structure on its own. This trend line is a structure. So when price breaks this trend line, that is what? It's a breakout structure. The market was buying and it changed direction. How do I know that it changed direction? It broke my trend line. So I know there's a change of what? Break off structure. The other thing that I want to also say, if I'm not considering the trend line, oh, I can consider the last low. Remember, look at this low, the low here. Let me put some right up here. This is Let's call it lower low 1. Let's call this lower low 1. Okay. Gosh, sorry. Okay, we call this lower low 1. This lower low 1, all right? I hope you can see this. I'm just going back because I don't want anyone that's so that it should be clear. Let's make it 18. Let's make it 18. Okay. All right. So this is lower low 1. Then this is lower low 2. Gosh. Sorry. I want you to get that thing that I'm calling breakout structure now, but just take this. My mouse is misbehaving here, so don't let me use this to waste time. This is lower low 1. This is lower low 2. This is lower low 3. This lower low did not, when it came down, when the market price came down, it did not break this one. When this one came down, it did not break this one. But look at this rascal lower low. This one, now the first thing that I notice is this high, when it was going up, it did not come to break this high. Ma'am, my antenna will on and say, come, there's something going wrong now. There's something about to happen. I am not sure. Now, this thing now might have come up here and it will come down here and still go up. It is possible. Do you agree with me? That it's possible that it comes up here, comes down here, touch this line again, and continues upward. So it is not enough for me to say because price has come down here, it is going down. And ladies and gentlemen, let me tell you this: when the market is in an upward trend, you don't have any business selling in this market. All you are doing, especially on the higher time frame. Now this is a 4-hour time frame. If I want to take a decision, I will go to my 15 minutes time frame and I'll be looking for opportunities to buy because it is in an uptrend. So, but the moment I see this break, if I see that price now broke, look at the first thing. Even if you don't draw this line, let's say, look at this high. This one is an high. It did not break this high just like this one broke the others, and instead it came down, and then boom, look at this, boom, it came down. Something is happening. There's a structural break here. This lower low, it has come to form another low here now. It has broken this low. There's what you call a break of structure. It has broken this structure and it is now doing down. So with this now, I know that the market has now gone into what we call a downward trend. Now, for those of you that like to use indicators, you like to use trend lines are very, very good and very useful. When this thing broke here, for me as a trader, what I will always wait for is what we call break and retest. Sometimes it does not retest it just, but in most 88% of the time, when it breaks, it will retest before going. What is it going to retest? It is going to retest this resistance line, because this line was a support line here, but the support has been broken at this place. Please, guys, please let me just be sure as I'm moving my mouse. Are you getting the direction, the location I'm saying? Please, can somebody answer me? I want to be sure. Places I'm placing my mouse, is it clear? Are you getting it?
Yes, sir. Yes, sir.
You are getting it? Okay, awesome.
Yes, sir.
Thank you very much. Yes. Okay. So here now, you see this is what you call break of structure. It comes back to retest. Now, guys, this is another place where a lot of people make money in the market if you know how to use trend lines. Look at the moment it broke. I know there's going to be a pullback. It was establishing a downward trend by breaking the structure here. Do you know what some smart traders will do? They will go and wait for it at this line and put a sell limit, knowing that two things could either happen. One, it could hit this line and then continue, brace it up again and continue to go up. maybe because of some fundamentals. In that kind of situation, that fellow will have put his stop loss somewhere here. That person will have put a stop loss around this area. Sorry. Okay. That person will have put a stop loss around there. Well, let's look at it. How many pips? If I waited for this place and the market came down and came back up, let me see here. This is about 60 pips. This is about 60 pips. Now, please, I want you to get what just happened here. I drew a trend line. My EA was trading, taking a buy. As it was taking buys, and I came to my system, I saw a break in this place. Guys, you don't need any prophet to tell you that things have changed. It's either you pause the EA. If the EA is taking a buy, pause the EA, pause the activities that let me be sure of what is going on here first. You are in charge of the EA. EA is not in charge of you. You are in charge. That's why you must understand the structural things that I'm talking about. Now, when I did, what I will do is I draw my trend lines. I saw there's a break in structure. Is either I'm using the trend line, two things that made me to know there's a change in structure here. Now look at this. This trend line was broken. Then the other one was that the low here was broken. The lower low, it now made a lower low. Boom. Now this high came to this place and refused to break this other high here. This high. Oh my God, you don't need any soothsayer to tell you that what you should concentrate on is in a sell market, that you are focusing on selling right about now. Now, let me show you something. When people talk about, I'm not talking about this indicator, it's a very good indicator, but please, I just want to show you one or two things that you will also see on your chart. Let me, there's this indicator we call the moving average, moving average. So if I have moving average 200, I can use what we call exponential moving average. Let me put it as yellow and make it thick so that you can see what I just want to illustrate something for you here. Now, guys, look at this. Please look at this. Most of the time, we tell you that when you see price above the 200 moving average, the 200 moving average is always giving you a direction. It gives a direction of the market. Now, as long as price is above the moving average, I want to show you some little things that will make you to be careful when you are using indicators. Now, look at this, guys. When price is above the 200 moving average, you are buying. And when price is below the moving average, you are selling. Now, look at something here. At this point here, it broke down. Let's say I don't understand. Let's say I don't understand breakout structure. I saw this. Oh, my price. Oh, price has come back above 200. Oh, this is a good time to buy. And you know what will deceive you? The market will tell you, oh, they just came to fill this value gap. There's a gap here. They just came to fill this gap. The market is going back up. And then you take your buy here. You take your buy a little bit. It comes down, boom, and then you are losing. So what do you do? What makes me to say this is a sell and I will remain in the sell? Don't be in a hurry. Be patient. I see the breakout structure. I wait for it to retest the zone. It can break this zone or come down. If I see it come down, I have every audacity to sell without any fear. Without fear, I will sell because I know for sure. And where do I even want to make my, which area do I want to make my sell? I would prefer to sell at this neckline here. Anything below this neckline, when price comes below this neckline, is where I want to sell. What do I call the neckline? You see where it came down here, came up here. If price comes here, look at these guys. You see, it broke down. You know, you are not expecting it. Let me remove this one in the just going to disturb us there. Okay. You know, when this one came down, you are not sure whether the thing, you just know that there was a break of structure, but has it been confirmed? Yes, the structure broke. You are sure that, okay, this thing is likely to go. But where should I enter? I wait for a pullback. Now, when I waited for this pullback, I'm not sure whether there's a fundamental that will make it to continue. So what do I want to do? I will put, let's say, a sell stop in this area so that it sells me here and then play whatever it wants to play and then come down. So that is the break of structure. Ladies and gentlemen, I hope you are able to get one or two things on this call. Wow, we were just, and there are quite a lot of them. These are not indicators. These are pure things that we just see in the market that will help you. Wow, I thought we get to a place where we could get to taking trades, but we are not in a hurry to start taking. We are not in a hurry to start taking trades, as it were. Let's just build. Let's just build structurally. We are laying the foundation. You get this foundation very well, and then you are able to build on it. Don't rely on EAs alone. Most of the persons that are teaching you. I myself, I use EAs, but I also rely on my own knowledge also. And not that I just want to enter the market. I want to see structural things that will make me to enter or to go out of the market, to activate or to pause my EA. Ladies and gentlemen, I hope we were able to get something here. If this
every loss is not in vain. Waking up at dawnlight, breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise up.